Hello and welcome to this video. In this video, we will analyze the Logitech stock which trades under the ticker symbol Logi, L-O-G-I. Also soon we will be having some great giveaways on this channel from time to time, and later this year we will start a great Patreon membership site also, so that you can have access to the tools and other vital information before anyone else. Logitech has delivered excellent Q1 results and the sentiment of bloggers and news has been really bullish. Also, the sentiment of investors is very positive, and despite the fact that the analysts' ratings consensus is moderate, but still we can see that no analyst has given it a sell rating. All these facts motivated me to cover the Logitech stock in detail today. Now let's first go through the major news of Logitech. So first of all, Q1 results of Logitech were very impressive. And now some major news according to Yahoo Finance. So Logitech introduces all-in-one dock to declutter the desktop and make joining meetings easy. So as 77% of Americans believe that desk clutter affects their productivity, Logi Dock is designed to declutter the desktop by providing a single connection point for desktop devices. Logi Dock connects up to 5 USB peripherals, and connection from Logi Dock to the desktop eliminates excess wires, dongles and unnecessary chargers for a cleaner, more organized workspace. Furthermore, Logitech approved the increase in dividend, which is great for investors who like dividend stocks. As stated in this article, Logitech International today announced that during its annual general meeting, the company's shareholders approved a dividend of approximately 0.87 Swiss francs per share, which is an increase of approximately 10% compared to the fiscal year 2020 dividend. All other proposals were also approved. Furthermore, the commitment of the company to become carbon neutral is another key factor in the growing interest in the Logitech stock. So it is mentioned in this article by Yahoo Finance that all Logitech products and operations will be carbon neutral in 2021. Therefore, I had to cover the Logitech stock so that we can look at the Logitech stock from a long-term value investment centric perspective without getting caught in the hype. I believe it is always better to do our own research so that we don't end up paying more for the value that we are getting while investing. If you watch this video till the end, you will understand my whole thought process which underpins my decision making process before investing in any stock as an experienced investor. And the 14 dimensions which I look at while analyzing companies shows excellent correlation between what the world's most renowned investors think about those stocks. For example, you can see my video on Alibaba by clicking on the link above to see what I'm talking about. Before we go ahead, nothing in this video is a financial advice. I am not a financial advisor, and these are just my own opinions about the Logitech stock as a long-term value investment. Before analyzing the Logitech stock in detail, I will first provide a very brief overview of Logitech. So according to TipRanks, Logitech International SA is a holding company which engages in design, manufacturing and marketing of peripherals for PCs, tablets and other digital platforms. It offers headsets, speakers, mice, keyboards and webcams. The company's brand include Logitech, Jaybird, Ultimate Ears, Logitech G, Astro Gaming and Blue microphones. The company was founded by Daniel Borel and Giacomo Marini on October 2, 1981 and is headquartered in Lausanne, Switzerland. Now let's analyze the Logitech stock through our 14 value-centric dimensions to evaluate its feasibility as a long-term value investment. I will also be interested to see how much score we get out of 100 for the Logitech stock. So as always, I will be interested to see if we can get a score of over 75% over the time frames of 3, 5 or 10 years and see the parallel or correlation between our feasibility analysis and the opinion of analysts. In other words, I will be interested in seeing how well our dimensions converge to the same conclusion as the analysts who have given it a moderate buy rating on TipRanks. Later on, if our dimensional analysis validates its feasibility as a good value investment, we will look at the current state of the market through the lens of 6 critical dimensions of market state to gauge if it is the right time to accumulate Logitech stock, or shall we wait for the market to offer it to us for a cheaper price. So let's go ahead And first analyze the Logitech stock via the 14 dimensions of value-centric investment feasibility. So the current price of the Logitech stock is $100. The current market cap is 17 billion US dollars. The PE ratio over the trailing 12 months is 15.7. The PEG ratio over the trailing 12 months is 0.7. The earning per share over the trailing 12 months is 5.51. The current price to book ratio is 7.0. The current price to sales ratio is 2.9. And the current price to free cash flow ratio is 12.7. And in the last 5 years, the average revenue growth has been 8%, the average asset growth has been 11%, the average equity growth has been 15%, the average net income growth has been 271%, and the average liability growth has been 6%. So as we can see, the total revenue as well as net income has been increasing from 2010 to 2011. And then from 2016 to 2020, while it dropped from 2012 to 2013 and remained almost the same between 2014 till 2016. Overall, the revenue increased from $2 billion US dollars to $3 billion US dollars during the past 5 years, which is a good performance. The net income increased from $119 million US dollars to $450 million US dollars during the past 5 years. Also, we note that mostly during the past 10 years, the revenue has either been increasing or at the same level. This is in fact normal in the industry since companies sometimes change their strategic direction and make some changes to their product and services as well as technology platforms to remain relevant, and that can reflect in the total revenue and net revenue also. So looking at the total assets over total liabilities over the past 10 years and also total current assets over total current liabilities over the past 10 years, we can see that during the past 10 years, the total assets have always been more than the total liabilities, and also the total current assets have always been more than the total current liabilities. And that is why both the graphs have always been over 1 over the period of last 10 years, which is a great achievement, and it shows the financial strength of the company. And looking at the PE ratio, the price to book ratio and price to sales ratio, I focus on PE ratio most of the times since it shows me the number of years it will take for the earnings of the share to add up and become equal to the current stock price or more than that. So it is a good way to see how much value we are getting by paying for a stock. So for me, a PE ratio of 20 is the ceiling. I never pay more than 20 times the earnings per share over the trailing 12 months for the price of the stock. Yes, of course, the earnings can increase in future and people can be bullish about the potential of the products and services of the company. But we know that at the same time, a blue ocean can emerge and sink the ship. So looking at the most recent 3 years, we can see that the PE ratio was around 29, 25 and 26 in 2018, 2019 and 2020 respectively, which shows that potentially for some months in 2020, it was okay to buy the Logitech stock. We will look further into the PE ratio range over the past 3 years, including 2021 also, after our dimensional value-centric analysis to gauge if it is the right time to buy the Logitech stock or shall we wait. And as far as the key growth rates are concerned, meaning growths in total assets, total liabilities and total equity, they all have remained mostly positive over the last 5 years except 2016. So total assets increased from $1 billion US dollars to $2 billion US dollars during the past 5 years, and the total liabilities increased from $564 million US dollars to $874 million US dollars during the past 5 years, while the total equity increased from $856 million US dollars to $1 billion US dollars during the past 5 years. The ROIC has always remained over 15% over the past 5 years and the past 3 years, which is outstanding and shows the proper positioning and refinement of value proposition by the management in order to keep it relevant in the business environment and also match the value proposition to the evolving needs and wants of the customers. These numbers indicate the strength of the company as a value creation machine and the competence of its management. The operating EBITDA and gross margins have always remained over 7, 10 and 34% respectively in the past 5 years. And in the most recent 3 years, these averages have improved even further, and we found that the operating EBITDA and gross margins have always remained over 9, 11 and 35% respectively in the past 3 years, while the net profit margins have always remained over 6% in the past 5 years. This shows that the company's services are perceived as valuable and it is competitive in its industry. And as far as the diluted shares outstanding are concerned, they have continuously decreased from 2010 till 2013, but increased on average per year between 2013 and 2020. And as far as the actual numbers of shares are concerned, the shares decreased from 179 million US dollars to 169 million US dollars over the course of the last 10 years. And now let's have a look at the overall score of the 14 value-centric dimensions over the last 10 years, the last 5 years, and the last 3 years respectively. These scores show the feasibility of the stock as a long-term value investment over different time frames. Feel free to pause the video if you want to look at each one of these dimensions and the result of it. So over the past 10 years, we get an average score of 71%. Over the past 5 years and 3 years, we get a great score of 86%, which is brilliant in an industry which is evolving very fast. Therefore, with the passage of time, the Logitech stock is becoming more feasible as a long-term value investment. So we conclude that the result of our dimensional analysis is in agreement with what the majority of analysts think about the Logitech stock. Therefore, since we look at an overall score of 75% and the Logitech stock has managed to achieve a mind-blowing score of 71%, 86% and 86% over the time frames of the past 10, 5 and 3 years respectively. Therefore, we believe the Logitech stock is a great value investment. Now, of course, the fundamentals are excellent, but before we purchase the Logitech stock, we need to answer the question, is it the right time to buy the Logitech stock or shall we wait despite its outstanding fundamentals? So as you know, if you are subscribed to this channel, before we press the trigger, we look at the state of the market and see the price, sentiment and hedge fund activity to see if it is the right time to buy or shall we wait. In other words, we look at the 6 dimensions of market state before making a final purchasing decision. So looking at the PE ratio over the past 3 years, we can see that in 2019, the PE ratio was between around 26 and 16. In 2020, it was between 23.62 and 8.12, which shows that at some point in 2020, the Logitech stock was on sale. Wow, it was a great opportunity to buy the Logitech stock when the PE ratio was around 8. And in 2021, we know that we still have some months to go. But so far, the PE ratio range has been between 24.29 and 15.96. And as we can see over here, the current PE ratio at this point of Logitech is 15.99. So it could be a very good time to buy the Logitech stock. And as far as the analyst rating is concerned, the Logitech stock is a moderate buy. So based on 7 Wall Street analysts who offered 12-month price targets for Logitech in the past 3 months, the average price target is 130 US dollars with a highest forecast of 151.68 US dollars and a low forecast of 115 US dollars. The average price target represents a 31.80% upside in the coming 12 months. As compared to the current stock price of 99.01 US dollars. And as far as the current price is concerned, it is significantly below the all-time high of 138.7 US dollars as we can see. But when we zoom out and look over a time frame of 5 years, we can see that the Logitech stock is still a falling knife. And as they say, never catch a falling knife. So right now, I will not buy the Logitech stock, despite the fact that it is significantly down from its all-time high of 136.59 US dollars. I will let the price correct and then I will start accumulating via dollar cost averaging. And we can see that over here in June 2019, the holdings of the hedge funds were significantly smaller, but they increased drastically from June 30th, 2020 till September 30th, 2020. And from that point onwards, the hedge fund holdings just went down really fast, because the price was increasing really fast too. So maybe the hedge funds will accumulate when the price is quite low. And as far as the insider buying and selling of the Logitech stock is concerned, we can see that the buying and selling is more or less in equilibrium over the past 1 year. So it does not give us a clue or give us any hint that can support our decision making process as to whether we should or shouldn't buy the Logitech stock at this point. And here are the similar stocks according to tip ranks. But as we can see, Cisco Systems, Apple, Microsoft and Amazon, they have very different business models. So even though we already saw that the Logitech PE ratio is quite low, even though it is not mentioned over here, but this comparison will not give me the right information, because as I said, the business models of the companies mentioned over here are quite different. Therefore, we get an overall score of 66% for the 6 dimensions of current market state, which is less than 80%, which we require before investing in a stock. Therefore, the overall score of the 6 dimensions of the market states suggests that it might not be the right time to start accumulating the Logitech stock via dollar cost averaging, and we should wait a little bit, because number one, the smart money is not buying the stock right now. The price chart shows that it is a falling knife right now, and we should not catch the falling knives. So I will wait for the correction to happen, and later on I will start accumulating via dollar cost averaging, as I already mentioned. But overall, the company is great, the numbers are great. And as we already saw, the overall scores over the past 10 years, the past 5 years and the past 3 years for the 14 dimensions of value-centric investment feasibility were excellent. But we just have to wait a little bit for the price to correct. Please let me know in the comments below, do you think that it is the right time to buy the Logitech stock? And do you think that it is a great value investment or not? I hope that you like the content of this video. If you would like to see such videos with my unbiased opinion and my own unique style of analyzing stocks, please drop a like, subscribe to my channel, and I will see you in the next video. Thank you very much for your time. Bye.